Right, right. Okay, so we'll just get back to you. Just give me 5 minutes. Yeah, right. So, the basic underlying growth has been about 9%. The overall space has grown by about 12 odd percent. Revenues 11,915 crores. So, 12,100 was the estimate, and there was a slight bit of decline on that number. I'm just waiting for the EBITDA. Okay, EBITDA has come at 2,847 crores. EBITDA estimates was about 2,900 odd crores. So about 24% in terms of margins. 24.3 is what the street was expecting. Abneesh Roy is now with us. Abneesh, EBITDA at about 23.9%. Volume growth at 9%, the underlying volume growth. Tea and personal care business have done well. What do you make of these numbers first up?
No, these are good numbers. So sales and EBITDA, it is 1 or 2% ahead of our expectation. So we need to keep in mind that May month there was a massive impact because of the pandemic. And HUL, of course, sees more impact in a few categories like ice creams and detergent and cosmetics and out of home. I'm sure rest of the portfolio would have done really well. Going ahead, key monitorable will be essentially palm oil prices. Palm oil prices from the peak have seen around 15-20% correction. Second would be how tea prices correct. Tea prices went up last year by some 60-70%. We do expect correction there, although on a 2-year basis it will be higher. But HUL has taken good price hike in tea. HUL has also taken price hike in soaps and other parts of business. And as vaccines pick up, we expect the out-of-home consumption, detergent, cosmetics, ice cream, the laggards to do well, while rest of the portfolio should benefit from the rural recovery. So overall, I think it's a good set of numbers, given in the context in which the pandemic was there. It's a good performance.
Right, Naveen Kulkarni is also with us. Abneesh, just request you to stay with us. Naveen, what is your first reaction to the numbers?
The underlying operating performance looks strong. So 9% volume growth is slightly ahead of what we were estimating. Margins, of course, are a slight concern. So margins we have to evaluate. As Abneesh pointed out, the input costs have started coming down from the peak. So palm oil prices are down. But I think margins is something that we will have to focus on from here on, the price hikes and the impact of price hikes on the overall revenue growth and how the operating starts kicking in from here on. However, having said that, if I were to look at the category-wise growth, personal care growth looks strong, home care is decent. So I would say that food and refreshment, I would say, tad below expectations, but overall, I would say that decent set of numbers.
Right. Abneesh, I have a very long-term question for you for HUL. Since the time GSK has sold their stake in HUL, the stock has not done anything. Marico has got re-rated. Some of the other select medium to small, companies have got re-rated. What do you think of this company? You think it's too big, or time has come where this would also start to do well?
No, so it's a fair observation, but it has got absolutely nothing to do with company being big. In the last 10 years, HUL stock has tripled. So it was big 10 years back also, and it is big now also. So it was only because of the portfolio of Unilever getting a bit more impacted than some of the names which you mentioned. So detergent, if we are not going to offices, detergent sales does suffer. If we are not traveling, ice creams is consumed more outside. Similarly, HUL has got office supplies, which is essentially B2B kind of thing. And cosmetics, same thing. If women are not going to office, they are not going to consume cosmetics the same way. But of course, we know that these are all transitory. If you see the UK data which has come, the number of cases are increasing, COVID cases are increasing, but number of fatalities are quite low. So essentially, India also will follow exactly the same thing. Even if wave 3 of cases happen, what will happen is the fatalities will be very limited because vaccines will be there. There is a herd exposure anyway. Seropositivity data already suggests 60-65% of Indians being affected by the virus. So I will say all these 3-4 categories which have been underperforming from Unilever will see much better coming quarters. And on the margin side, clearly worst is behind in my view, and they have taken a lot of price hike, and tea and palm oil and detergent kind of prices could taper off from a raw material side. So Unilever could definitely start outperforming going ahead because of the underperformance last 1 year. Because of COVID, it has got nothing to do with the company doing badly or being too large. It is the best run FMCG company in India, and so it should bounce back very quickly.
Right, Abneesh. Thanks so much for that. Vinny is also with us. Vinny, if you could just talk to us about the numbers. You've been going through the press release, comments coming in from the top management. Take us through everything.
So Pankaj, in terms of numbers for TT now, expectations, the numbers are largely in line with the expectations, where obviously we've seen the revenue growth of around 12.8% and the volume growth is coming in at 9%, which is better than what we were expecting of around 7%. So surely better volume growth than what we were expecting. Margins, as expected, were slightly under pressure, 23.9% versus 26%.